G'day everyone, welcome back to Pete's Investing. Today's April 27, 2023. This is the Tesla share price review. Someone asked me to do an update on Tesla and see where it's going. So here it is, and hopefully it's helpful to you as well. What we've got here on the weekly and the daily, we combine the moving averages of the price chart along with some moving averages of the CCI 150. And if they're in alignment, then we trade in that direction. In this case, both the weekly and the daily for Tesla are showing shorting environment positions only, no buying opportunities. So let's drill on both of them and see where we are and why I'm saying that. So the methodology I use is the moving averages of the price chart. It's moving average 60, 3, and 5. If they're all in the same direction, in this case they're all bearish, and I combine that with the CCI 150 and the moving average 50 and the moving average 5. And if all indicators are in a bearish movement, as they are now, combined with the price chart, then if they're both in a bearish movement, that's a shorting environment. So that's on a weekly, and you can see that on the daily as well. Same methodology, both are showing shorting environment positions, so only short positions to be taken. And a trading idea, if you're going, in this case, if you're going short, when the candle breaks below the fractal, like it did back here, when it did show a shorting environment, you would have gone short there, and you're currently still in a trade with that. So again, just a bit more background here. I've got this support line here at 164, and it's broken through that support area. We had a resistance at 217.86, and it bounced off that once and almost twice. I've also got here a Fibonacci retracement between that range. You can see here that period there bounced just above the 50% Fibonacci retracement, and also a secondary Fibonacci here between that low and that high. You can see there it tested the 50% level, or just above the 50% level, and now it's broken through the 50% level as we speak. So again, only shorting positions if you can short this stock. So the way we usually do it is I prefer to buy it, because if it pays a dividend, you also receive a dividend for that period. Now, in terms of the weekly trend, you can see there predominantly it's been in a shorting environment for since the early or the middle of 2022. Last time it was a buying opportunity was those spikes there when the CCI and as well as the moving averages on the price chart were in alignment. So there was 1 week there and 1 week there, and I've got those dotted lines to represent that. So back here, excuse me, back here you've got these periods where there was a week there where you could have gone long, and again that period there you would have gone long when on that day when the candle broke above the fractal, and you had a nice little trade there, and you would have got out of that trade. I like taking small percentage gains. And again, that would have been I'd say maybe a 4 or 5% gain. Let's just draw a ruler. So between that close of that day up to there, that was a 11% gain. So that's a nice little trade. I like taking 3, 4, even 5% gains where I can. The other trade was back here. Again, remember there was only 1 week of trading there and another week there. So there was a trade you could have taken at that one, and there was another trade you could have taken there, and again that would have been probably a similar sort of trade to that area. Let's just scroll across. This was the other week you could have taken, and that was another entry there. That was a let's draw a ruler on that one. Had you gone long there, just broke the 5% gain period. So again, I like taking small trades, small gains, about sometimes even a 1% gain, 2 or 3%, depending on how the momentum of the price is going. You can see there as well on the weekly, the CCI is still declining along that period, so possibly may have avoided going along there. I would have liked to have seen that longer term moving average 50 of the CCI turn into the upside, like it was back here, to be able to be more confident about taking long positions. Anyway, just more of a lesson learnt from Tesla. It's okay if you're going short. If you can short it, go for it. But I prefer taking long positions, because part of my trading strategy is taking dividends when they're paid. So if you are caught out against your trade, at least you're receiving a dividend. Thanks for watching. Click on the subscribe button. Support us more on Patreon, and we'll see you in a future video.